Today's subject, we're going to talk about the difference between shareholders, directors and trustees. Hi, I'm Jeff Banks, the founder of Banks Consultancy.
And I'm Robin Banks, the CEO of Banks Consultancy.
And we're not your ordinary accountants, as everybody knows. And today's subject, some of those acronyms or terms that people might just not understand the difference between. Now, Robin.
There's some that do confuse me. What's difference between shareholders, a trust and directors?
Well, I think you meant trustee there, but let's go to the first one, the difference between a shareholder and a director. In a company, the owners of the company are people called shareholders. They buy shares in the company and that's their investment in the company. Other than the amount that they've paid on their shares, they have no more liability to the debts of that particular company.
Oh, like if you have shares in Telstra, for example.
Exactly right.
Right.
But if you're a director of a company, you have responsibilities not only to your shareholders, but to other creditors as well,
Right.
For the operations of those companies. And if you're seen to be negligent in acting in your what's called a fiduciary relationship, that is the relationship that you take on behalf of the shareholders, then you can be fined and even sent to jail if you're that bad.
Director has to pay the bills.
Director should pay the bills, yes. Now,
And the shareholders don't have to pay the bills.
the shareholders only reap what they sow, which is their investment in the company. They get it back. They effectively don't have any responsibility for the debts of the company. That's what's termed the veil of incorporation is all about. Now, you were also asking about a trustee.
Yeah.
In corporate law, you can have what's called a corporate trustee, which means a company can be the trustee of a trust, but also individuals can be trustees of trusts. And it basically means the same thing, that the company takes on the responsibility for running the operations of a trust.
Right.
Now, who's going to be the ultimate responsible person? Not the shareholders, it's going to be the directors.
Right.
They will the ones who will steer the trust in the directions that it needs to go, and that they will be the ones responsible for anything that may very well go wrong.
Okay.
Now, it becomes particularly pertinent when it comes to things like personal guarantees and debts with the tax department, particularly for things like PAYGW and superannuation. You need to make sure that if you're a director of a company, especially one that you are not a shareholder of, that you maintain all the debts in relation to PAYG and superannuation in a timely basis, otherwise you will become personally responsible.
Right.
And further, that if you don't lodge your BAS on time for that particular company, you could also be responsible for the GST of that company as well.
Oh, okay.
So it's here at Banks Consultancy, we get right up all our clients and make sure that they lodge their BASs on time, not only for that particular reason, but the lodgement of the form is what creates the fine.
Right.
So we make sure that everybody gets things done, keeps themselves out of being fined and on the straight and narrow.
Okay.
All right? So that's what we have for today. If you have any problems with any of the things that we've talked about today, please do not hesitate to contact us here at Banks Consultancy, and one of our trained consultants will run through it with you. I'm Jeff Banks.
And I'm Robin Banks.
And we are Banks Consultancy, and we are not your ordinary accountants.